Good day, everyone. This is Firas from Jasmine Restaurant Management System, and today we are going to speak about the integrated accounting module that comes with Jasmine RMS. As you know, we have a full accounting system integrated and ready to use with Jasmine RMS so that you don't need to apply or use or buy any external accounting system and try to move the figures and accounts and journal vouchers from one system to another. Jasmine RMS comes with a complete accounting system integrated and ready to use out of the box. Let's start today with 101 accounting from Jasmine RMS. I'll come back in a second. Let's start with a whiteboard, and in this whiteboard I have some explanation about restaurant income and restaurant expenses. Any restaurant, cafe, cafeteria, any kind of restaurant business, it has an income, and this income comes from sales of goods, and sometimes they have other revenue from small things. So sales of goods, we sell food, we sell beverage, we sell shisha, we sell sweets, any kind of goods that we sell, it will come and it will generate an income and generate a revenue for us. And also, if we have a delivery service, so we have our own drivers and we offer the customer delivery services with charges, we can get some revenue from delivery charges. If we offer catering services, also we can or we might have some revenue from catering service. Um, at the same time, we have also uh, in expenses. So every restaurant in the world also has some expenses. We have uh, direct cost, which is the cost of sold goods, cost of food, cost of beverage, cost of shisha, cost of sweets. And also we have other direct costs. And we have to remember that we have manpower. So our employees, the chef, the staff working in the kitchen, the front office staff, the waiters, administrative managers, and also we have a big chunk of our revenue going to the delivery companies, the mobile apps like Talabat, Carriage, Uber Eat. They take a lot, big percentage of our sales. If we have wastage in the kitchen, it will come here. It will be one of our costs, so we have to take extra caution about the wastage of raw items during the cooking, during the preparation of the meals or preparation of the goods that we sell. Um, we have also indirect cost, and the indirect cost comes like utility expenses, electricity, gas, internet, maybe cable, everything that we pay for utility, it will come as indirect cost. The maintenance for the kitchen equipment, for the dine-in equipment, for silverware, everything comes here as indirect cost. The administrative expenses like the rent, like governmental fees, and nowadays we have to pay a lot for marketing and advertisement on social media, direct advertisement for influencers, so that people will know more about our restaurant. So, in general, we have uh, income and we have expenses. So, let's have the expenses near our income here, and let's zoom in. Okay, so the restaurant income comes from sales and maybe some other revenues like delivery and catering. So we sell food, we sell beverage, we sell shisha sweets, all comes here. But in the opposite side, we have also expenses. The expenses, there is direct cost, cost of food, opposite to sales of food, cost of beverages, opposite of sales of beverage. We have other direct costs like the manpower cost in the branches, in the outlets, delivery company commissions, wastage of raw items, and we have also indirect costs like utility expenses, maintenance, administrative, and marketing and advertisement. You have this is the basic business of any restaurant. And in this basic business, we have to understand that everything is coming from Jasmine RMS, uh, will be translated, every sale coming from Jasmine RMS point of sale module will be translated into income. And using accounting module from Jasmine RMS, we have to handle all the other direct cost and the indirect cost so that we can get uh, accurate numbers for the managers and for the owners. Are we losing money? Are we profiting? What is our situation during the last month? What is our situation during the last quarter? During Ramadan, during Eid. So a lot of responsibility on the accounting side from to enter data into other direct cost and indirect cost. And this is important, and we will see how can we do it in just a second. Keep with me. This is the basic business module for any restaurant in the world. We have sales and we have cost. The sales will generate income and the cost will generate expenses. If we subtract the expenses from the income, we got we get the profit. And every business in the world is working to generate profit. If our expenses are higher than the market, we are losing money. If our expenses is reasonable, like the market, we are generating profit for the business owners and the employees working inside the restaurant. I'll come after a second to explain some other things about restaurant accounting. Keep with me. Okay, here we have a sales order. Inside the sales order, we have one cheeseburger, one vegetable pizza, small size, strawberry cake, and one water bottle. Now, in this sales order, we have four items, but those two are food items. So, cheeseburger and vegetable pizza. And the revenue of selling those two items will go to sales of food, and the cost of those items are going to cost of food. Strawberry cake is a sweet, so it will go, the revenue will go to sales of sweets, and the cost will come to cost of sweets. Water bottle is a beverage, so sales of beverage and cost of beverage. The total sum, the grand value of this order is 110 Qatari Riyal. We give discount 10 Qatari Riyal, for example, and the net value of this sales order is 100 Qatari Riyal. The net value will come to us if we sell this order by cash. So it will the net value will come to the cash box. But if we sell this order using card, for example, debit card, credit card, it will come to the card sales. And 100 riyals, if we sell it through delivery company, it will come to the delivery company sales account. So those two, this one, it will come directly to our cash box. So we have the cash in our hand, cash in hand. But those card sales and delivery company sales, those are receivables. So I will receive the money if it is a debit card, maybe next day, maybe after, as according to the bank. If it is a credit card, maybe it will take 2 days or 3 days to hit our account. So it will come to our receivables accounts. If it is sales by delivery companies like Talabat, Carriage, Uber Eats, it will come to delivery companies' sales receivables, and we might get the money after 1 week, after 2 weeks, at the beginning of the next month. So has bear the contract between us and this delivery company. So this is the cycle of any sales order. When we sell any order, items inside this order are categorized by kind. If they are food, they will hit the sales of food and cost of food. If they are sweets, they will hit the sales of sweets and cost of sweets. If they are beverage, sales of beverage and cost of beverage. Keep with me. We will talk more about the cost, the direct cost, the indirect cost, and the operational cost. Okay, we have here cheeseburger. Cheeseburger is a menu item. That means that we sell this item to customers. Cheeseburger has ingredient, one bread piece, one slice of burger meat, slice of tomato, cheese, mayonnaise, ketchup, and seasoning. Now those ingredients has cost. Those ingredients have cost, and this ingredient has half Qatari riyal, 5 Qatari riyal, 0.20, 0.25. So from where are those costs? We have two scenarios to calculate those costs, direct cost of the ingredients. Those two scenarios, we call them fixed cost and moving cost. So we have fixed cost and we have moving cost for the ingredients of any menu item. So when do we use the fixed cost scenario and when do we use the moving cost scenario? We use the fixed cost when we have long contracts with suppliers for providing the raw items, the ingredients, with fixed prices. So I have a contract for 1 month, for quarter, 3 months, for 6 months with suppliers to provide me the ingredients with fixed prices. Regardless if the tomato in the market goes up or goes down, the suppliers will give me those ingredients with a fixed price. Sometimes they are gaining, sometimes they are losing, but in average, they are providing the raw items and the ingredients in a profitable way for them and for us. When we are using the moving cost, we don't have we don't need to have long contracts with the supplier because we are dependent on the daily market prices. So sometimes the tomato is up, sometimes the tomato is down. We don't care. We have all the ingredients, prices, and cost covered through the moving cost scenario. In the fixed cost scenario, we don't need to define recipes into any system because we have the fixed cost and we know exactly how much the cheeseburger will cost me during this month. So I don't need to define any recipes into the system. While in the moving cost scenario, I have to define a recipe for each menu item into the system. Uh, in the fixed cost, we don't need to handle the store entries, the receiving, the moving, the consumption, the transfer, the wastage. We don't need to handle those entries. While in the moving cost scenario, we need to handle all the entries of the store. So receiving from supplier, maybe transferring from one store to another store, if there is a wastage we need to handle. But the system will handle the consumption for me based on the recipe that I have defined. So whenever we sell one menu item, the system will deduct the ingredients based on the recipe from the stores. Now, the advantages of the moving cost are obvious. Menu item cost will be updated automatically based on the purchasing prices. So today I purchased the tomato with 3.5 Qatari riyal per kilogram. The ingredient cost will be updated and it will affect the recipe, and the recipe will be updated automatically and it will affect all the menu items that have tomato inside. So all the menu item cost will be updated daily based on the purchasing price. But here, the prices and the cost are not updated automatically. We need to adjust the fixed cost manually when the supplier's prices changes. So if the supplier decided to change the prices next month or next quarter, we need to go to all menu items and adjust the fixed cost for them based on the new prices. Now, in the store inventory, all the store inventory will be updated automatically based on the consumption of the recipe, and we don't need to update any or handle any entries for consumption on the stores. Here, we don't have any control on the stores. We don't have control on the entries, on the receiving, on the transfer, on the wastage, on the consumption. We don't have any system generated reports for the stores because we are using the fixed cost scenario. So we have to handle the store inventory manually using paper forms, using books, and rely directly on the storekeeper or the purchasing officer. So was the difference between the fixed cost scenario and the moving cost scenario, and how it will affect our work in the restaurant. Uh, this is mostly used by small and medium restaurant who don't have a lot of manpower to handle the store entries or the entries into the system. We don't recommend it. We do recommend that you have the moving cost scenario. Yes, you will have some data entry needed for the recipe for each menu item. Yes, you need to enter the receiving of the ingredient every day to the system, but at least you know every day how much left of meat, how much left of tomato you have in the inventory, what is the consumption based on the sales, you know, and control everything about the stores. Here it is easier. You don't need to handle the store entries, you don't need to have the recipes into the system, but you don't have any control on the stores whatsoever. Thank you. This is was the Accounting 101 based on Jasmine Restaurant Management System. I hope that I can see you and we can meet in other videos. Stay safe and goodbye.